Hey, good morning, Forex traders. Today we're going to cover Forex pairs, Euro versus dollar, Euro versus yen, Euro versus Swissy, pound versus dollar, pound versus yen, pound versus Swissy. Then, of course, like I said, gold, oil, all these other wonderful things. We'll bundle it all together with some technical analysis, some fundamental analysis, try to put some trade plans together. Hey, if things go well, we'll get some good trade plans. But for sure, we're going to have fun. So let's go. So welcome to the Forex.Today YouTube channel. Let me remind you that trading Forex is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, nice to meet you. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Been trading currencies for a very long time. And I'm here to share my experience with you with the overriding goal of helping you learn how to put together trade plans. And we'll do that over the next, hour and a half. Technical analysis, fundamental analysis. Sometimes we go into trader psychology, all that kind of stuff. But the most important thing is that you get involved, that you ask questions, that you take notes, and that you practice on a demo account and start to develop the skills that you're going to need throughout your Forex trading career. So take advantage of this time. Make sure you treat everyone with respect as well. If you could, just out of common courtesy, would you leave a comment if you're watching this video? Would you do the little thumbs up likey thing? Would you do that? And also, if you want my chart templates for free, go ahead and download them. Also, can I get like 6, like a testimonial or something about if you downloaded the chart templates, do you like them? Like, I don't mean 4 paragraphs, I mean like 2 sentences. Could anyone say, maybe just leave it in the comment after the video, and if you don't mind, I'll just take sort of a screenshot of your comment with your YouTube name on it and say, this person said the chart templates work. You should try them. Why not? You should have them. So if I could get 5 or 6 people to leave some sort of I like these templates to 1 or 2 sentences, that'd be super cool. Thank you, Jimbo. What else? Oh, hey, please don't visit TradersWay.com. Sign up for an account. It could be a demo. That's cool. Get into your back office. Download MT4. And then install those chart templates. Okay, make sure you do that. Yeah. You should do it because I'm considering charging $1, maybe by Monday. $1. So if you want it for free, please do that now. All right, so let's move on.com. Thank you, Traders Way, for making all this available to us and being wonderful. What did I want to do? Oh, I'm way over here. Where am I? Oh, it's weird because my screen's so big now. I'm used to looking down here for stuff or on a tiny little screen, and I look up, I'm like, oh my gosh. So just getting used to the screen, man. It's fantastic. Yeah, Ron. Just to the hey, I downloaded. Hey, these chart templates are awesome. I couldn't imagine trading without them. That kind of stuff. No. I haven't touched anything, guys. Is my volume low? No, it doesn't say that it's low. Auxiliary audio device 1, and my voice is going right up to the yellow line near the red line. Thank you. Thank you, Adam. Is anyone else having sound problems? It's indicating that I'm broadcasting a little bit, but still good. All right, well, let me just turn this up. I just don't want to be redlining, that's all. So now I'm just redlining. Okay. Did seem a little at first. Yeah, well, I just raised it. Is that better, guys? I want to make sure everybody's happy. Yeah, that's good. Yeah, now we have to fix the chat latency. Yeah, ask Google to upgrade their YouTube servers. Good luck with that. All right, let's move on, guys. Let's move on. Anything standing out to you? Dollar strong. Aussie strong. Huh, CAD is strong. Kiwi is strong. What could we conclude from this? Oh, good. Thank you. I'm glad it's good, Brooke. Right on. Risk on. What else? Risk on. A lot of people say risk on. Commodity strong. Yeah, very good. I don't like the dollar being strong, though. The trade war easing and stuff. Yeah, it's funny, though. Like, I hear that all day, every day. Oh, it's a trade war. It's a trade war. I don't know. Do you guys remember what last week, like probably 1 week ago, I did like a half an hour explanation of the yield curve and all that kind of stuff, and everyone's like, the economy's going into recession, and I'm like, no, 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 it's not. Yes, inverted yield curves, 50 years in a row of, or 50 whatever, have predicted recessions, but this is man-made. This is not the market adjusting. Also, do you remember, like, do we really care about the 210 or do we care about like the 130? Like what yield curve do we really care about, right? But this risk on, risk off, this it's the trade war, it's not the trade war. Oh, look at the bond market and all that kind of stuff. Like, first of all, there's two things going on with the bond market, and AKA yield. So if you're reading about yields and inverted yield curves and all this kind of stuff, just remind yourself: one, the Fed told everybody to lock in high rates because they're going to drive them down. So that means you buy. You buy them now at a high price because the Fed's going to lower them. And that in of itself lowers interest rates. Now put yourself in London or Frankfurt or Zurich. All your investments, if you put your money in a safe haven in those countries, like you buy the German 10-year, right? You buy the Swiss 10-year. You buy even the British 10-year, like you take all these economies, and if you invest short and medium and even long term, you earn negative. You are absolutely 100% guaranteed to lose money. Does anyone want to sign up for that? Then you look over in America, and you're like, oh, dang it. In America, I can still get 1.5% on a 10-year T-note. Or I can invest in Germany and earn negative. So you're like, oh. So it's like a carry trade. You see what I mean? So you're like, hey, the Fed's cutting interest rates, but what it's saying to Germans and to the Swiss and to the British and other investors around the world, like, hurry up, get it while it's hot, get your 1.5, Fed's going to drop it down in just 2 weeks. Come on, get your 10-year T-notes, come on, pay 1.5. We're just weeks away from it dropping, buy it while you can. And everyone's like, oh, damn, I got to buy one because the Fed's going to drop it from 1.5 down to 1.25, so you might as well lock it in today, right? You see what I mean? So is this really the economy saying recession is near and the whole thing's going to collapse? No, that's not what's going on. Right? Does anyone... I actually labeled it, Chuck, so if you actually go to YouTube, it's actually labeled instead of like the daily technical, live technical training or whatever the typical YouTube headline is. That one actually says yield curve analysis. Okay. So anyways, that is not what's happening. The biggest problem in the U.S. economy right now is lack of investment from corporates, and probably because of that low productivity. But that's not, so people are taking things, they don't quite understand it, but they read somewhere that inverted yield curves mean recession. And I've actually told you in the past that's what that means. But what we're talking about now is not what I was talking about, right? It was the one where, let's say, the 1-year borrowing cost for a business is higher than a 30-year investment. I mean, maybe we're getting there, but I didn't say when the entire world is driving these yields down because their economies are pathetic. Now, maybe that leads to it, but we're not quite there. It's like the dog wagging the tail in this case. Maybe because the rest of the world is in such poor shape and they're investing their money into the United States, then maybe that leads to future lack of demand or something, right? But it's not the inverted yield curve that's the problem right now. It's the symptom of every country in the world pouring money into the United States. Doesn't sound that bad, right? Like everyone is buying the 10-year T-note. And again, for two reasons. One, wherever they live, their economy sucks, or their banking system sucks, or their central bank sucks, but they're getting negative yield, so they got to put it somewhere, right? And the other thing is the Fed is forcing everyone to do it because everyone's front running the Fed and making money doing it. Like, again, that doesn't sound bad, right? So anyways, be careful is all I'm saying. All right. With that being said, risk on, right? So this is foreigners buying the 10-year T-note, but this is also increased demand for commodities, increased demand for commodities, increased demand for commodities. What else could we possibly translate this information into as far as a trade is concerned? Looks like I can make this a little bigger. Nice. Anything? How about something like, I don't know, that. Nice. Nice. So Mexico is an exporter. They export lots of oil. Not sure if you know that, but they export a lot of oil. They have actually a lot of gold. But they also export products to the United States. Okay? Which is just another form of commodity, right? They put together, they put windows into Volkswagens before sending them to the United States, right? So anyways, I'm trying to help you. It's just another commodity play, but it's also a carry, right? So when we do this, so I'm short USD Mexican peso, and the yield on this, if you're leveraged 100 to 1 over the course of a year, is 960%. So if you traded $1,000 last night and you got $100,000 worth of Mexican peso, so now you're in a $100,000 position, but you only put 1,000 in. Think of that, guys. You use $1,000 of your cash, and the good people at Traders Way let you trade 100,000. Holy smokes, right? So now you got $100,000 invested into Mexican peso, and over the course of 1 year, you will be paid $9,618 in interest payments alone. $9,618 on your $1,000 investment, guaranteed, paid every 24 hours. Nice! Okay? Isn't that nice? So anyways, but you got to be short for a year. So that's not likely. But every day you get paid 1/365th of your 9,620%. Anyways. Okay. Isn't that nice? How nice, huh? Gutta. So I got an opportunity. I cannot lose money. I may not make any money. I probably won't make any money. But if I can stay short, I'll get paid every day. So not like I'm done. My money can work for me now. Cool, right? Look at it from this time frame. You're like, dang boy. Gang boy. Dang. Yeah, cool. Good. What else should we kind of talk about? Let's say I was going to be short this for the long term. Swing traders, what pivot should I be short? If I want to be short for like 12 weeks, let's say, what pivot should I be short at? Adam says a bounce from here, make a lower high, and say, yeah, if it bounces up here, I'm going to lose nothing, right? No, I don't like the central pivot, actually, Jim. I don't really care, because think of it this way, depending on the circumstances, bulls and bears use the central. So I don't really like the central. I really don't. Sometimes on an aggressive move, but that depends on the trend and a bunch of other things, but I really prefer a different one. There's one that's non-debatable. Let's put it that way. Next month's M3. Exactly. So let's try to analyze what that price is going to be. Oh my God, it's the price from short. We all knew that was coming, but anyways, where's my drawing tool? We all knew that was coming, but it's still funny. I think it's funny anyways. But here's where I'm short. Oh, where's my drawing tool? Where's my drawing tool? Let's try it. It's not drawing. Stupid drawing tool. Let's see. Delete. Open. Let's try it again. Drawing tool. Drawing tool don't work. All right. So exit drawing tool. This is what I'm doing, by the way. Exit drawing tool. Reboot drawing tool. Yeah, Adam. How convenient, right? How does he do it? Could it be fainting? All right. So I've definitely got challenges along the way. That's why I don't have any risk on this trade. Okay. So, there we go. Check that out. Oh, next month's M3. When do you move your stop? When I think I can. I'm not mechanical that way. Very often, like I'll trade, I'll go to bed, I'll wake up in the morning, and I'll move my stop. Basically like that. Okay. The other thing, so Adam says it's going to bounce in here, and I'd say, yeah, that's definitely bounceable. But look at the psych level in there too. So yeah. So Adam is 100% right here. This is what is probably going to happen. Do you understand that? Right? That's probably what's going to happen. But I'd like to be a bear. I know it's not bearish, but I sold properly. I sold at next month's pivot. This is the actual price. Bears want to be short. And this is also an exit zone for bulls. Okay, and this is an exit for bulls, right? So like bulls are supposed to be getting out. And I understand that bulls are going to want to buy sort of in here. I understand that. That's why my stop's at break even. So I got a pretty decent entry, and I might even have to try again. It may not work, but it might work. That's the thing. I can't lose any money. So I made sure there was enough room for me to have profit to remove my risk, right? But this could happen. If it's truly a change in macroeconomic conditions, well, then I'll get paid, right? If we go back and I said, what creates a situation where, Kiwi is strong, Aussie is strong, and CAD is strong? What conditions create that? And you're like, oh, well, positive economics. Okay, great. This is just another currency, so another commodity currency. So if Kiwi is up as a commodity currency, as CAD is up as a commodity currency, as Aussie is up as a commodity currency, I can go to Noki, I can go to Peso. There's all kinds of things I could look at, right? So I look at it, I'm like, yeah, I got a good shot. I mean, yeah, I know it's counter trend and stuff like that. I get it. But it's across the board happening. So I'll sell here. And I know I'm going to be challenged here. And there's more than enough room for me to kind of remove my risk before that challenge. So now it might do this, it might do this, it might do this, or it might do this. Either way, I do not lose money. You understand? That was my thought process anyways. Okay, that was my thought process. So now we could go to a currency that I didn't look at. This, right? Let's change this now. I gotta go somewhere else for this. Oops. Oh no. There we go. Where do we want to go? I don't even have it up here. Well, just for fun, let's do it this way. Instead of USD Mexican peso, let's look at this one. Not the same. Yeah, Highlander, aka Mickey, is talking about, if I can be in this for a while, next week I might get a repatriation flow. Remittance flow. So I might benefit from by a fundamental move next week. So yeah, that's also part of it, right? Everybody knows that, right? $2.65 billion is going to move to Mexico next week. So the Mexican peso, if the dollar isn't strong, the Mexican peso will move. But we kind of need either the US dollar to be neutral or the US dollar to be weak. And if so, I'll really get paid because I'm front running that 2.65 billion. But 2.65 billion is nothing compared to, you know, the 3 trillion US dollar move that happens every day, right? So, you know, 3 billion versus 3 trillion, nothing, right? But it might work out. That's all. Okay. Nocturnal Black says he doesn't know. I think that's what he's saying. Doesn't know the remittance trade. So at the end of every video, I try to put what do they call it? Anyways, I put a video. I try to remember to. At the end of every video, YouTube video, it pops up like a thing that says you should subscribe or you should watch this other video, and it's called How to Trade the Mexican Peso and Why It Works. You should watch that video, and it'll explain it. I think it's a 20 or 30-minute overview. Okay. Okay. So Norwegian krone, that's typically impacted by oil. Okay. And that one is not. Look at that trend. So you've been killing it since July, huh? Just crushing this trade. Yeah, go way over there. All right, put that there. So now that I'm running this laptop on this screen through HDMI, I've lost the sound, and I don't know why. I guess I have to mess with that. So it's not sending it from the laptop to the screen. The screen speakers are up 100%. This is up 100%. I'm just not getting sound. So yeah, we got some news coming out. What time is it? It should be coming out shortly. Okay, 2.4. Cool. It's not, they're pretty decent numbers. 2.0, 2.4. Average weekly claims. Yeah, see, none of this says, oh my God, Fed, you should be cutting interest rates. No. But what the Fed did is they raised interest rates and then created a carry trade that was unwanted. But apparently the Fed doesn't know anything about that. So anyways. Yeah, Paul, the volume on the monitor is at 100%. So it's not sending it from the laptop somehow. So it must be maybe an HDMI setting. Maybe that's it. How do I test the trade the news now? Trade the news is different. So, oh, here's the test. No.
This is a 24-hour live broadcast test channel from the Trade the News broadcast network. If you are hearing this message, your sound card and network configurations are working properly, and you are now ready to listen to our other voice.
Good. It was a setting. Okay, so anyways, let's do a trip around the world. Here's something we planned out 3 weeks ago. It's looking reasonable, doesn't it? I still would like it a little lower to be a bull, but you notice that in a risk-on move, even the pathetic Great British Pound will want to rise. Okay, the next thing is, will it stabilize above? Remember with the step up we were talking about? Step up. So let's say get up into this upper range and then maybe up to the next upper range. Mr. B, actually the gold market's already open. You guys trade gold every day? Gold opens before the stock market does. The interesting thing about gold is that often a trade is made around 7 a.m. Right, the trade is made 7 to 7:15, 7:30-ish. And by 9:30, I've captured 50 to 70% of the average daily range. Okay, guys? So to whoever said, hey, when the, what's gold going to do when the market open? It's already open. So I'm saying, like, this is probably your move. You've either already bought it or you're going to sell it. But it's not the stock market. It opens hours before the stock market. So typically a gold trade that I would do would be about 7 o'clock in the morning, New York time. Okay. So if you're a bull, where would you buy? Swing traders, if you were a bull, where would you buy? What's your buy pivot? Daily M2. Oh, you mean this price right here? That one right there? That's the one you like? Give it to me, baby. Give it to me, baby. Yeah. Let's do something else. So what time is it now? 8:30. Okay, 8:30. So let's look at what I said earlier. So it's 8:30, almost 9. So this is 8, right? So I said somewhere between 7 and 7:30, I typically buy, or I typically trade gold. That's right here, brah. That's right there. So the way I trade gold is I walk into the market and I can do it on my watch. Sometimes I'm in the shower and my alarm will go off. Bing, ding, ding, ding. Time to get up and trade gold. And you're like, oh, I gotta trade gold. So I'm drying off. And I head downstairs. I'm like, oh yeah, I'm gonna trade some gold. It's gonna be great today. And I don't know, right? So anyway, so I get there and at exactly the time I would expect. Remember, these are now 5-minute candles. We're on the daily M2. So if you know how to day trade, daily M2. If you know how to day trade, the timing of that is just amazing, right? So then you'd kind of get in here somewhere, and maybe you jam your stop below here, and then you're up here, and you move your stop closer, and now we're up here, so now you move your stop to break even, and you let it run. Now the thing is, by 9:30 or so, by whoever said, when the stock market or when the market opens, well, that's not 9:30, but usually by 9:30 or 10, you'll get 50 to 70% of the average daily range. Because what happens is then it gets to a bear zone after the open, let's say, and the stock market opens and it pops and everyone's trading the news and volume and volatility increases, which is not when you want to trade, by the way. That's when fools are departed with their money. What will happen is it'll then spike up, hit the profit target, and then you'll have a pretty decent retracement, but you want to be done by then. Okay? So if you haven't made 70% of the daily range, okay? Daily range, which means you can be in it all day, or you can make, let's say, 50 to 70. So let's say, or you earn 60% of it by trading at the right time, and you're probably out somewhere between 1 and 3 hours. So you're basically done by the time the day starts. But it's just a trade, because the thing is, you're clever enough that you're trading currencies as well as metals, as well as energy and all that kind of stuff. And oil is very similar as well. Oh, by the way, yeah, so Travis said the template and stuff. So I'm redoing everything right now. I was up till 1 o'clock in the morning last night. Okay? Right? Huh? Dedication? I was up till 1 o'clock in the morning last night, and I'm preparing the new files for you to download. And I'm using a different system because a lot of people, not a lot, 5% of people said, I signed up for it, but I didn't get the email. Well, I pay a service money to send the email out, and it's the one thing they do as a business, and they make billions of dollars, and all they do is 100% of the time send out the email. But 5% of people are like, I didn't get the email. Dude, it was sent to you. I don't know where it goes. I don't know your ISP, your country, your server, your whatever. It goes to you, but 5% don't get it. So I'm bypassing the email process and creating a new system where it creates an account. You'll log into the account, and then you can download it from inside the account. Different process. So all of that's being developed. It's only time and money. Don't worry about it, but all for you. That's why I might charge $1. $1! Okay. Jeff says, does anyone trade gold long term? Oh, for sure. Yeah. The downside to trading like a futures contract is that you don't earn any interest. Plus, there's rollover, and that's going to be risk as well if you're trading futures contracts. If you're trading gold long term, but you own physical gold, then there's something called carrying cost, because you don't keep, $1 million of gold in the back of your Buick. You have to put it in a bank or a vault somewhere with security and guards and all this kind of stuff. And so that costs money. Literally, you have to pay rent. Your gold has to pay rent. Okay, we call that carrying costs. Now, this XAU USD, it's not a futures contract. It's not physical gold. It's some sort of cash derivative. But we can look at it, and I can show you that this is actually unique. If you're short, you're actually earning interest. This is so much better than trading futures. This is so much better than trading physical gold. If you're short, you're going to earn a lot of money. Okay, a lot of money. Because remember, this it doesn't include your leverage. Okay, so imagine you're going to earn 300% a year. Futures contracts, they don't pay you anything. Physical gold, you pay to hold it. You lose money guaranteed. But if you're short in this sort of derivative Forex product, you will actually be paid 286% a year on the money that you've leveraged, right? Or 2.86 on your cash position, if you want to look at it that way. If you're long term, you're going to get creamed. Not really, though. Okay, right? But it adds up. Like, you don't really want to be long XAU long term. It will add up. Okay, so it'd be like $12,000 a year to have a standard lot if you're long. So you better be up 100,000 in profit, right? But so anyways, just be careful. If you're going to be a long-term trader, meaning you get into the position and hold it, feel free to be short, but whatever you do, do not buy it and hold it long-term. Now, the way around all of that is day trade this sucker. Okay, so let's see if we can figure out how to day trade this sucker. Okay, let's see. You buy it at the M2 and it goes up and you're done for the day. You buy it at M2, it goes up, you're done for the day. You buy it at M2, it didn't work out. You buy it at M2 and you're done for the day. This one you didn't get an entry. This one you buy it at M2, you're done for the day. This one you buy it at M2 and you're done for the day. And then today you buy it at M2 and you trade it all day. And at 4:59 you shut your trade. Otherwise, you're going to be charged if you're long. Okay? This trading stuff, right? So complicated. The trade, boss, the trade. Easy peasy. Okay. You guys remember setting this one up? We did it yesterday. And I think last week we talked about the drop, the retracement, right? Retesting the channel, and then setting up a trade that might last, just might. It didn't look like it yesterday, but we talked about it, right? Just might be the trade for the rest of the month. We don't know, and it still isn't clear. But it's amazing that right on the line, we get a massive bearish engulfing candle. Amazing luck. Benjamin, do you always? Yes, I do. I always. But does that answer your question, Jeff Thompson? JT? Jatho? Anything, but don't say Thompson twins, right? Yeah, Prince is funny. Sometimes I think this is premeditated. Yeah. That's right. This is profit in the first degree. Right? It's all premeditated. Profit in the first degree. Jeff Beck, you like that one? Yeah, JT's better, right? But it's so last year. J-Tom's all right. Or even Tommy. So anyways, guys, this whole conversation was, actually, this went back 2 weeks ago, to the 15th. Remember, around the 15th, I said I was already planning next month's trade. I'm already setting up September. This drop, right, I'm sure I drew all this out. Okay, down, remember, it's just a swing trade, M3 to the target. You have to assume a retracement. Okay, now I didn't know it was going to do it by Tuesday, but that sets up the counter trend, and that gets you back to the central. Every swing trader knows that. But the thing I did 2 weeks ago was not only would it break down, but it would pull back. You know, I think this was plan A and this was plan B. Am I right? Is that how you guys remember it? Jeffrey the Giraffe. That's good. Polly says, yep. Everyone else is, really? That really happened? Really? Yeah, dude, I'm telling you. The reason I know it is it's not my opinion. Okay? Do you understand? That's where you got to get to. I know that's what I said because it's not my opinion. I don't trade my opinion. Right? You know what opinions are like, and they all stink. I don't have an opinion. I read the charts. That's what the charts say. They said it 2 weeks ago. They said it 1 week ago. They said it on Monday. Look at, like, dude, let's just talk. What did we talk about Friday in the swing trading group? Look, it's still there. M3, right? WM3, let's clear this up. Let's clear it. Let's start again. And let's do black. And let's not have it so fat. Let's do it almost like a pen. Well, if it's a pen, then let's make it blue. I like that better. All right. Weekly M3, okay, off of a monthly M3. It should go down. What's the target? Monthly M1. Yeah, but Wayne, it's only a triple top. How could I have possibly known at the monthly R2 where I've been taught the entire market's going to exit their positions? I got to be careful. That might not be the M2. That might be the M1. Everything's upside down. But anyways, it works the same. Right? 1 touch, 2 touch, 3 touch. Look at that. It's just like beautiful, right? And any swing trader will tell you, if you take that shot, this is your target. Okay? Not this. This is your aggressive target, and that usually is set off if you're off the central pivot. So if we had come up and turned here instead of at the triple, if it made a lower high, then it's going to make a lower low. Okay? That's what that predicts. So quite literally here, this sell, which we set up on Friday in the swing trading group, had a target of this. Not this, or this. Not this, or this. But based on what everyone learned in the swing trading course. Man, I tried to get it so you can see it. I'm trying to get it precise. That was the target. Look at this. This is the entry price. Can you see? Like, it's exactly to the pip. 133.13 with a target of 132.24. Exactly to the pip, upside, downside. So I might be planning next week. Okay? So if you don't know how to swing trade, join the swing trading group. Okay? And I am probably next week or the week after, probably the week after, I'll send out a bunch of emails to everyone in the swing trading group, and we're going to gather over probably 4 meetings, and I'm going to redo the swing trading course. I'm going to re-record it with everybody so we can go through the same process, but maybe if you have some questions, I can incorporate that into the training and so on and so forth. Okay. But if you want to join the group, you still can. Swing.fxbootcamp.com. We're meeting tomorrow. Okay? And because I'm re-recording everything, if you remember, you're getting the swing course included now. So you're saving over $1,000 just on that process right alone. Boom, you just saved $1,000. And then I'm going to take it out and give it to and put it back, so you'll have to pay. So, but what am I going to do? I need to re-record it. So I thought, well, then I'll just re-record it with the swing trading group. But then so then it has to be included. So I just put the old one in there. And so, oy vey, your deal of the century. If you're going to join, you better hurry up. Okay. Hurry up and join. All right. Now what? Okay. So there's that kitty cat. Very nice. Very nice. Lots of intricate pieces here. Yeah, that's going to be my next one. Okay, Marina? Maybe we'll just record that whole thing in South Africa. Maybe that's what we do in South Africa. Maybe the whole thing is a day trading course. We put it all together, record the thing live, and then make that available to people that can't make it to South Africa. Maybe we should do that. What do you think, Marina? Maybe that's the way to do it. Yeah, Travis, tomorrow, because I haven't sent out an email to schedule it for Thursday. So let's just do it tomorrow. I'm trying to get some other things done as well. All right. Even this one's trying to move, but I don't think I would take this one. But even that one's ugly. But yeah, it'd be Cape Town. That might actually be a really fun way to put it together. I can just see the top part of the question says something wane and typically US dollar weakness in second, third week of September. Well, that's what I'm trading. All my trades are based on the same thing, macroeconomics. And that's the same thing that put me into yen pairs, into exotics, all that kind of stuff. It's all the same thing. So that would lead up to dollar weakness typically. But remember, we're not in a typical year. The entire world is scrambling to buy US treasuries. It's like a ridiculous bull market in treasuries, guys. Ridiculous. Just like fantastically bullish, which means every country and every billionaire and every institution on the planet, they're scrambling to buy US treasuries as fast as possible. Okay? And that is dollar strength. Now, typically, you wouldn't have a scramble like that. So I would be careful with the dollar weakness idea. But what are the other things that would go in that same seasonality play? Maybe Swissy weakness, maybe yen weakness, for example. But you already got like pound. Like you could just wake up in the morning and say, I'm going to sell the heck out of the pound today. I wonder what I'll be buying. So you open up a scenario like this. You're like, let's go find some pound. And right? Shane, I'm thinking the second week of January. Like, or maybe first week, like right after, maybe right after New Year's, like maybe the 3rd, let's say. I don't know what day that is, but let's say the 3rd of January. I don't know. But I can't think of a better time to be in Cape Town. Hot! Greg, send me another email, wayne@fxbootcamp.com. And I'll check, but I mean, that's something that the database wouldn't be wrong on. So you might have signed up with a different email address. So the other thing you could do is you click on like reset your email, you type in your email address, and if it refreshes and you never get an email, that's not your email. Okay. But at the very least, maybe I can look it up. But the problem is the database only looks up email addresses. So if you're like, well, I use this email address and I search, I'm like, dude, it's not there. But maybe I can find through like confirmation emails that you've purchased. I can do a search for Gregor and see if I can find that to see where you sent it. But almost certainly you used a different email address. Almost certainly. And you're like, I know I didn't. Well, but we'll find out. But most likely, like 95% chance, you're just using the wrong email address. For example, Greg, when you paid to join, did you get confirmation emails to say that your credit card was charged? So anyways, email me. Just email me. We'll figure it out. I have to go in the back end anyways. So just email me. Don't worry about it. Right on, guys. Sharp, sharp. All right. Yeah. So you wake up in the morning, you're like, I live for one reason and one reason alone. I sell the Great British Pound. How many people here know George Soros? I showed you a picture the other day of me in the annual report and George Soros in the same annual report. Like we were on the board together, which is really cool because I was like, I don't know, 21, sitting on a board of directors with George Soros. Pretty wild, right? But how many people know of him? Like you don't know him. Like, hey, Georgie, what's up, G? Right? Yeah, but you know him, right? You know of him, right? What do you know of him? The one thing that pops in your mind, you're like, George Soros. Right? What do you know about him? If you could say, why is he famous? Say it in like 5 words or less, right? Yeah, the guy that broke the Bank of England. Does that mean he had a bias? Does that mean he had an opinion and a bias? And he put together a strategy behind that and then carried it out tactically? And he made $1 billion, and you know it, and he's famous. He made $1 billion in one day. You know, the funny thing about that statistic, from him making $1 billion in one day, and that's back when $1 billion was a lot of money. Now it's not a big deal, right? But back then, $1 billion was a lot of money. What you don't know is on the second and third day, he made $2 billion. So anyways, he did really well for himself. So why is it that you don't trade like that? Why do you sit down every day and like wing it? You never listen to me. You never take my advice. Just keep doing what you're doing. So here's a guy that made $1 billion in one day because he said, I hate the strategy of the Bank of England. I am going to crush them. See, they were going to enter the Eurozone. They were actually going to give up the pound and use the euro. But to do that, you need to do like 7 things. 1, 2, 3, 4, 5, 6, and 7. Now the funny thing is, George Soros says, oh, I know what they're going to do before they do it. Okay? Now he's a funny dude. He does all these things to prove that capitalism is the best, but it's flawed. So like most governments try to preach to you that everything works, especially in a free market and all that kind of stuff, right? And it's very comforting to think that. But it's not a perfect system. And, I think you know that, right? And there are flaws. And so he'll do things like, okay, well, the downside to transparency is I know what the hell you're going to do. And that's a flaw, per se. Like, the Bank of England can just do what it's supposed to do to enter the Eurozone. But now that they've published what they're going to do, I am going to bet against them. Now, the Bank of England is leveraged 1 to 1, which means £1 for £1, right? Pound for pound. But George Soros at the time was something like 400 to 1 leverage. So, in effect, he had more money than the Bank of England. So, like, if you have, let's say, $10 billion in the bank, but you're leveraged 400 to 1 times 400, right? You're like, dude, bring it on, brah. Not 400%. 400 times. Right? So anyways, Bank of England ran out of money. But he was telling people that this is a flaw. Yeah, totally front running, right? And made it more expensive to do what they needed to do to achieve 1, 2, 3, 4, 5, and 6, and 7, to the point where then the Bank of England said, you know what? We change our mind, screw it. And they canceled the whole thing. That was his point. And by the way, he does that kind of stuff all the time. And he does it to help improve capitalism. Okay? He does it to improve capitalism. Because if you pretend there's no flaws, then you're not going to fix anything. Okay? And he wants things fixed because it's improvement. So anyways, my point here is he knew exactly what he was going to do, developed a strategy around it, woke up in the morning and traded that way. So you could, for example, and I'm not saying you should, but you could just say, Brexit seems bad for the pound. Therefore, my strategy is to short the British pound. Tactically, I will use technical analysis to confirm specific prices and timing of when I would like to sell. But I will sell. I will not buy. I will not deviate. I'm going to punish the British for this crazy nonsense that they've inflicted on them, but will drive wealth to my family. Like, I don't understand. Like, why this is what you should be doing. You know it. Now, maybe not the pound, but just anything. Pick anything. What are you going to do tomorrow, next week, next month? If George Soros can do it and makes $1 billion, maybe you can do it and make $1,000. I don't know, right? So you could say, well, maybe there's a sell there. Maybe there's a sell there. Maybe there's a sell there. right? Maybe there's a sell here. I'm too zoomed in. Maybe there's a sell here, and not in very I'm going the wrong way on that one. So in less than 10 seconds, I could probably create 6 trade plans. I can create 6 trade plans in 6 seconds. Okay? Why? I have a bias. After that, it's easy. Absolutely pathetically easy. Because you know the price, you just don't know the time. So you have to use patience and technical analysis. Right? You see what I mean? You got to get there. I want you to get there. You have to get there. I want you to listen. I know you don't. Like, that Wayne guy is so funny. I like him. No, but you got to listen. You got to develop. You must develop a strategy. Not like trade 5A crosses. No. A bias. What does your fund do? My fund sells the British pound, and we're going to make tons of money on Brexit. That's what we do. That's what I wake up in the morning and prepare for. That's what I dream of at night. When I jog, when I meditate, when I do the dishes, I think about selling the Great British Pound. I can give you 9 different trades in 9 seconds. I know my prices. I just have to wait for the time and direction and managing the risk, but like, I know what I'm going to do. I know what I'm going to do. I'm thinking about tomorrow. I'm thinking about next week. I'm thinking about next month. I'm thinking about all the way into the end of October. This is going to be crazy. Then there's going to be massive volatility. It's going to be awesome. Or you say, I don't have a clue what's going on. I don't know what I'm doing today, yet alone tomorrow. Tomorrow, Wayne, tomorrow's an abstract. Right? How could you possibly know the future? Well, not trying is not a good strategy. Right? So let me see if I can create a strategy to sell British pound. Boom, just created one. Done. Okay. Yeah, trying is a pretty good start, right, Pure? If you're starting, go to fxbootcamp.com, buy the all course video bundle, and spend the next few months going through all the courses. That's my advice. Okay. I'm sure there's probably dozens of people that would confirm that. That's what you got to do. I guess we should probably go back here. So Oswald, when you're learning fundamentals, are they teaching you how to manage the balance sheet at a commercial bank so that you understand things like monetary policy and the fractional nature of the banking system and how money is actually created? Or do they teach you that CPI is a basket of goods and services? Yeah, well, that's what you get for free. And then you'll probably be told, right? But you'll also probably be told that the market's moving because of the CPI release that comes out around the 15th. You're like, you got to trade the CPI, got to trade the CPI. Like, news is not fundamentals. You have to remind yourself that news is not fundamentals. So you can trade knowing almost nothing about CPI. But if you're going to be a professional trader, you need to know about how the central bank works. And the central bank doesn't even look at CPI. That's the funny thing. So traders, for some reason, get all hyped up on like CPI and stuff, or GDP, which was like, what was our economy doing 3 months ago? Like, who gives a crap what it was doing 3 months ago? But anyways, these moves in the market are not created by news. And yes, maybe the news is surprising. Yes, maybe the market moves 30 pips or 40 pips or maybe 50 pips today because it was so surprising. But you need to learn how to set up trades that are worth 500 pips. If you can't do that, then pissing around with these little news trades, it might be exciting, and maybe you buy yourself a cup of coffee, but you're not going to create a career about that. Okay? So Miguel says, how important is monetary policy to your Forex trading? It's the whole thing. Right? Yeah, so Joey says, yeah, so that free course is great for exposure, but it's not going to make you a better trader. It's like you could probably I think you should take a college class on economics, macroeconomics specifically. I think that would be a really good thing. But that's kind of what you're learning, right? In the fundamentals course, you're basically doing a Harvard class on economics, because I have a macroeconomics degree from Harvard, like, or you can, right? So that's a good place to start, right? It's a good place to start. I would like to re-record the whole thing and do another version. I can't do it now, but so you will expand on it and stuff. But that's a good place to start is all I'm saying. Someone said, where do I start? You should learn macroeconomics with someone that graduated with honors, top of his class, with a macroeconomics degree from Harvard. That's a pretty decent place to start. But it's not the only place for sure. All right, let's move on. No, Barry, it's not that it has the ability, it does make the trends. That's all this is. That's it. What we do is trade between the central banks. Okay? Now, we're not big enough to move that market, but who else is in the water with us? We have institutions, right? Institutional traders and investors, and we have hedge funds. And so we don't make money off the central banks. We make money off the greed, the sloth, and the, what's the other one? The greed, the sloth, and the, greed, the sloth, and something else of the hedge fund managers. Yeah, of course. Visit tradersway.com, open an account, and you should be good to go. Gluttony, thank you. Gluttony. The greed, the gluttony, and the slothfulness of the 800-pound gorillas. They're carrying more bananas than they could possibly eat. But the nice thing is they climb up into the trees, grab all the bananas, drop a whole bunch of them all over the place, and then they climb back out of the trees, eat a bunch of bananas, and fall asleep. And there's just more bananas than us monkeys possibly need. Yeah, Oswald, but I'm not interested in that, bro. In fact, Yeah, I just saw what the other thing you posted. Dude, no more, okay? Oswald, I don't need to say it again. No more. Okay. All right, so WTI, right? You have to choose up or down. That's what it's all about. Up or down, that's it. Ideally, you're not making a choice by the hour. Okay? Okay? Okay. So like how does a swing trader handle this? Right? Maybe trying to catch this. Stop is below here, so they survived. Great. In the zone, stop black here. Oh, they caught that. This one, no trade. Unless you're there, but I doubt that. So this one, no trade, but this one and this one are now up here. And then today, you bought here with the stop there, and you're worried about this, but we'll see. So if this comes down any further, you might exit the other trades. What you're trying to do is this for tomorrow. So therefore, you're going to move these stops there to this entry. You know, hopefully tomorrow, if this makes a higher high today, hopefully tomorrow you'll have three stops, one at break even, two at profit. Okay. Now, interestingly, if you were a bear, you sold here and your stop was just above, and you survived that. But then today, you know, or yesterday, you got knocked out of that. Did you try this? You might have shorted there. Okay. In a counter trend move, and you really need this to come down if you're a bear. If this comes down, you probably already shorted, but then if you shorted here, then your stop is now here, and your new trade is probably here, and so you're looking for a new lower low in which you will move this stop to break even and this stop to profit, and you're looking for something like that. And so then tomorrow, actually, you're going to want to sell up into here, and then if that moves down, then you move this one to profit, this one to profit, and the new one to break even. And by then you should be on 3 trades, so on and so forth. Miguel says, would taking an economics class help me improve my Forex trading? If it's macro, yes, not if it's micro. Right? But it's kind of like saying, I want to be a brain surgeon because I want to be rich and drive a yellow Lamborghini, but I don't want to go to medical school. And actually, I don't give a crap about saving people's lives. I just want the yellow Lamborghini. Right? So, right. If you are a professional currency trader, should you have taken an economics class at some point in your life? Yeah, probably. Yeah. I would say that that would not hurt. And specifically what we do is macro. Okay. Some of my economics classes were just absolutely fantastically fascinating. But also some of my economics classes were fantastically difficult. And Harvard, especially I've been taught economics by people that like senior economists at the Fed, working at the Fed all day, the Boston Fed, and then they drive over to Cambridge to teach. sort of a side gig, but nobody laughs at you for being a professor at Harvard, right? So my professor spent the day at the Fed and then came to Harvard to teach me economics. It was an amazing, ridiculously difficult class. Like sick, but fantastic, you know, that kind of stuff. I wish I don't know. The people that got A's in that class were geniuses. I'm telling you, like geniuses. Or they were senior economists at the Fed already or something. I don't know. Extremely difficult class. I have 15 or 20 years of macroeconomics trading experience, and it just destroyed me. It was so difficult. But fantastic to survive it, right? And have done it and all that kind of stuff. So I've taken 3 classes from people, 3 economics classes by people that work at the Fed. Pretty amazing stuff. Oh, you got your economics degree? Right on, man. So yeah, will these things help you? Absolutely, guys. Well, learning what CPI is? Well, here's what CPI is. It's one measure of inflation. Okay, great. That doesn't help you do anything. If you don't know like why that's important, and really, it's not why it's important, but you know, like you don't even need that information. You need to know central banking. What does the central bank do? It does monetary policy. What do? We trade money. What does the central bank do? Monetary policy. The policy over money. We trade money. The central bank influences money. We trade money. The central bank influences the value of money. The velocity of money, the demand of money, the cost of money, it's all controlled by the central bank. That's all you need to know, and they tell you what their policy is. Hi, my name is Jerome Powell, and I am weakening the dollar. Like, why do you even need anything else than that? You already know. Did you see the housing data this week? Dude, it doesn't matter. We already know the policy. Like, come on. Right? So, yeah, okay, learn CPI. It's a basket of goods and services that measures the prices. Great. You should know that. Like, if you don't know that, like, oh my God. But it's not going to make you a better trader. But if you go through that, you're like, wait, I know CPI, I know PPI, I know PCE, I know GDP. Like, good. I know ISM. Great. Good for you. It's not going to make you a better trader. Because if you know all that, but you don't know central banking policy, then you don't know jack. Because the central bank looks at that data over the course of months and quarters and years. And then they one day say, well, looking at all that information, we go, we're going to change our policy. That's the only thing that matters. And by the way, they tell you. So if you're doing CPI and you're learning CPI on a free website, you're learning CPI, great. But if you don't understand central banking and macroeconomics, dude, it ain't going to help you at all. It doesn't matter. It really doesn't matter. Because the central banks tell you what they're going to do. And if you're not converting that into profit, then, and by the way, the Fed doesn't use CPI. It uses PCE. So like, trade CPI all you want. Good luck. Have fun. Woo, 2.5 instead of 2.4. Do you actually believe that number? Or when they say GDP came out 2.4, but we were expecting 2.3. Like, get out of here. There's no way they have that kind of accuracy. Oh, NFP. It was 180, but we were expecting 185. Like, dude, it's all, they only sampled like 50,000 people to come up with a number to represent what's happening to 320 million people. There's just no way there's any real accuracy, right? So what is the one thing that matters? What's the big domino? Central banking policy. You don't know central banking policy, and then you take our central bank and their central bank and their central bank and their central bank and their central bank. They all have different newses. They all have different CPIs and different PPIs and different GDPs, different kinds of. Some are importers or some are exporters, right? So what is macroeconomics then? How this policy, this central banking policy, impacts that central banking policy. Okay? Okay? So, go ahead, take the free courses, learn what CPI is, but don't get confused that now you have to start trading CPI and sitting in for, when does CPI come out? Oh my God, it came out 2.4. Oh, like, no. So it's a bit of a disservice where you're getting thrown into this stuff and it's a diversion. I used to do the speech, and I don't do it now because some people are very religious, but I used to talk about the temptation of Christ, where he's walking down the street in Jerusalem, I guess. I don't know where he was walking. And on either side of him, there's alcohol here, there's prostitutes there, there's gambling over there, right? There's gluttony over there. And he has to walk the righteous line, right? Follow the righteous path. And I'm trying to get you focused on what you need to do to get you on the righteous path. You don't need to go, oh my God, CPI, and you're focusing on that, and oh, it came out 2.6 instead of 2.5, I should sell. I made 12 bips today. That was so good. Dude, that is such the wrong thing you need to be doing. That is so wrong. Because now, what are you doing? You're taking risk on when volatility is higher, when slippage is more likely, when spreads widen, and you're taking risk to make 12 pips. And then what are you going to do after that? You're like, I keep making 12 pips, but it's not big money. So I guess I'll triple my lot size and see if I can make some real money. And you just blew up your trading account. But hey, your free website taught you how to do it. So I'm not picking on that site because it seems to be a nice site. What I'm picking on is don't get lost. Don't like, oh, well, Wayne was really funny. Now I'm going to go over there. And this other guy, he's really funny too. And then I'll go over to this website there and I'll read about that. And then I wonder what this Elliott Wave thing is going to be like. And maybe I should be doing shit coins. And like, dude, just sit down and listen and take notes and stay focused. And then work your butt off and get really good at this, because I don't believe you need anything else than what I show you. You can strip everything else away. What you need is a pen and a pad, right? That's what you need. Lock yourself in the lab with a pen and a pad, to quote the great Dr. Dre. Okay? So news is not fundamentals. News creates volume and volatility that increases spreads and increases the likelihood of slippage, and that is not good for you. I love fundamentals. I didn't even need a degree. I didn't need the degree. Why did I go to Harvard? Why? So I can learn macroeconomics? I already knew macroeconomics. I just went there because I had a chance to go to the best university in the world. Great, fine. You don't need to know the difference between CPI and PCE. I've had to explain it in a paper and do the math. You don't need to know. But what you do need to know is how money works. So I can teach you. Maybe you should take the fundamentals course at FX Bootcamp. Yeah, it's going to cost you money. If you don't have money, then you got bigger problems than macroeconomics. You got microeconomics, right? Focus on your microeconomics situation first. Yeah, for the paper beyond it. Yeah, why not, right? Now, the interesting thing is this degree is horizontal. The other degree is going to be this way, right? So anyways, kind of interesting. So educate yourself. Yeah, that's what I would do. Oh, that's what I am doing. Yeah. The more volatility, the more movement. No, not on the short run. No, not on the short run. Like, or the more volatility. No. See, no. That's an amateur mistake. Okay. If you're focused on trying to make 20 or 30 quick pips today, you're not going to make it. You're just not going to make it. The only time that's good is when you're learning how to enter trades. So like in the live performance coaching that we have at FX Bootcamp, we take people through over and 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 over short-term trades. Why is that important? Because if you can't enter a trade, there's no way you can carry out your strategy. Okay? But you need to know how to trade long-term. That's it. If you can't trade long-term, you'll never catch a trend. And what are the basic facts that everybody knows? You buy low, you sell high, you keep your winners small or your losers small, and you let your winners run. Okay? Okay? Do I make sense or yeah, right? So I'm trying to give you guys realign your satellites on common sense. Forex is about business. Forex is about business between Mexico and the United States, between the United States and China, between China and Brazil, so on and so forth. That's what it's all about. And those countries have economies. Some economies make things, some economies buy things, some economies don't do anything. Maybe they rape and pillage their own people. That's usually what happens to all the other economies that don't do one or the other. Okay? And so if you understand basic business facts, you're going to learn how to trade very successfully. There's no tricks. If you're all in the small time frames, you're not doing it right, nor are you going to do it right. Okay? So when you understand like things like what would George Soros do? Well, he saw weaknesses in the system. What's like the Turkish lira, for example? Why did the Turkish lira crash? Because they didn't have any foreign reserves. They didn't have any cash. They borrowed money in dollars, they borrowed money in euros, and they borrowed money in Great British pounds. Why? Well, the money was free. Why the hell wouldn't you? But the problem is you have to pay them back in the currency you borrowed. You have to pay back in pounds, in dollars, in euros. Now here's the problem. Turkey doesn't export nearly enough. That's it. Their economy generally sucks. Sorry, Turkey. I have a lot of Turkish friends. I've always wanted to go to Turkey. I'm fascinated. I've had relatives die on Gallipoli, right? So Turkey's a fascinating place. So all thumbs up to my Turkish friends, all my Turkish brothers and sisters. But the economy sucks and the government's unstable. And because of this, they don't do much business for the country for a country of its size and its strategic importance in its location, but also in its history, the thousands of years Turkey's been in the center of the world, right? It's not nearly, it doesn't do even nearly as much business with foreigners as it should. Therefore, it doesn't have any foreign currency. But it went out and borrowed a bunch of borrowed currency. So this is what it came down to. When they had to pay back their loan, they didn't have any foreign currency to pay it back with. So what did they have to do? Sell their currency to buy some pound. Sell their currency to buy some dollars. Sell their currency to buy some euro. So they flooded the market with lira. And we know when supply goes up, value goes down. So the value of the lira fell. Well, 1 or 2 months later, they had to pay another debt. But their currency is weaker than it was 2 months ago. So now they have to flood the market with more lira than they did 2 months earlier to buy foreign currency, to pay back their loans, which drives the value of the lira down. So now 2 months go by again, and now they have to pay back loans again. And now, over the course of 4 months, the value of the Turkish lira has fallen exponentially. So now they have to 10 times more lira to flood the market to pay back the loans, and it just gets worse and worse and worse and worse. So you just have to understand basics of business. They borrowed money for free because why wouldn't you? But the big problem with Turkey is they don't export anything, or not nearly enough. And there was a massive shortage of foreign reserves. Well, why is that? They don't do business with foreigners, but they borrowed money for foreigners. Okay? Okay? Basics. The thing is, how do you take a very complex model that like Harvard would teach you, and they would give you something like ridiculous, redonkulous, and then throw all the calculus on top of it. Just wow, but what does it mean? Oh, Turkey didn't have any money. All they had was lira. Nobody wants lira. So they flooded the market with lira, scrambling to buy foreign currencies to pay back their loans. So Turkey drove the value of their lira down. Okay? That's all that mattered, because they didn't have money. So they think of it like printing money almost, right? You think of, you guys remember the story of Germany after the war owed all these countries money. The country said, Germany, you were very bad and you owe us for this war because we just had a war with you and you did it again. So so you lost and you owe us money for this war. Well, that sounds really good, right? But then Germany's like, well, we don't have any money. We spent it on 2 generations of wars. Like, we don't have any money. So what do? We'll just print it. Okay, you want some money? How much do we owe you? You owe us 1 trillion Deutschmark. All right, we'll print it. They printed 1 trillion Deutschmarks. There you go. How much? Hey, America, how much do we owe you? 1 trillion? Here's 1 trillion Deutschmarks. Hey, England, how much do we owe you for bombing London for 150 days in a row? You owe us 2 trillion. All right, print it up. Here you go, 2 trillion. And of course, it got to the point where you needed a wheelbarrow of Deutschmarks to buy a loaf of bread. Okay? Very similar thing. Now, I don't think Turkey actually printed the money. They may have. But the thing is, the amount of liras in the open market globally went up so drastically that the value of each lira fell, and then so now they needed to flood the market. So now a lira bought less pound than it used to, and less dollars than it used to, and less euros than it used to. So then when they had to pay that next debt, they had to flood it with even more than the time before, because the purchasing power of every lira fell, which then diminished the purchasing power of every lira. So then when the next debt came up, then they had to do it more. So let's say $1 million debt cost, let's say 1 billion lira. And then the next time to pay the same debt off, let's say again 1 million, Well, now they needed 1.5 billion lira. And then another debt came up. Again, it's the same $1 million debt, but now they need 3 billion lira. It used to be 1.5, and before it used to be 1, but the value of the lira kept falling. So now another time period goes by and another 1 million US dollar debt comes up. Now they need 5 billion lira. And it just got worse and worse and worse. And it's the same kind of thing. The supply went up. The same like if you just printed it and there was more and more supply. Well, there was more and more supply on the open market as they needed more lira to pay off the same debt. So the debt never changed per se, but it was a vicious. There's the first African American to win the Nobel Prize in economics. I can't think of his name now, but he wrote about the virtuous cycle and the vicious cycle. So maybe Google that if you're looking into the history of things. But that's common sense, right? Not where I get all pissy is where people are doing like, what should I do? What should I do? I should do shapes. Okay, let's do it this way. Oh, I'm going to measure this, this, and this, and then I'm going to do this, and this, and therefore I'm going to, oh my God. Do you understand, like, focusing on just that kind of stuff, like patterns only, and technical analysis only, and rules? So when you get into this, like, well, this has to be 42%, 42 degree angle, and this has to be 100% of this thing, and this has to be a one. And you get into all these crazy, ridiculous. Oh, Arthur Ure. Yeah, that sounds right. Yeah, that sounds right. Thank you, Chuck Duck. They get caught up in all this crap, and then I say, well, why don't you just tell me what's happening between New Zealand and Switzerland? Why don't you just tell me what the economic situation is in New Zealand and the policy of the central bank to manage their economy? You're like, I don't anything know about that, but this is a 42 degree angle of this, and so therefore if you measure this to this, and then I'm going to, oh, dude, it's like getting caught up in smoke and mirrors. I only ask you to learn how to understand. That's all I've ever taught. I want you to understand the basics of technical analysis so you can time your entries. That's all it does. What's the direction of the trend? Use technical analysis. Has the trend bottomed out? Use technical analysis. Has the trend reversed? Use some technical analysis. Okay, but you should understand those things. And you don't need complicated, stupid. I mean, yes, you can use Gartley patterns and butterflies and bats, and you can, but I wish you wouldn't. I'd rather you just know macroeconomics. And you could say, well, I know what's going on here. Okay, I know what's going on here. And then you say, well, based on what I know what's going on, based on common sense. Okay, based on common sense. I'm trying to get rid of this stupid Gartley. I can't even get rid of the Gartley. Based on common sense, I've made a decision. And now I'm going to use technical analysis to either buy this or sell this. And the patterns are very simple. Literally, like I've showed you, I could do 6 trade plans in 6 seconds. So then what is the issue then? It's not the technical analysis. That's the easy part, right? Making a decision based on, but even then the central banks tell you. Like, that's why I don't want you to fight it. Like, why would you fight it? I want you to make a decision, right? Let me ask you something. Okay? Am I a bull or a bear on oil? Lungster King says, can a country file for bankruptcy? No, they always have the ability to tax, but they also have the ability to print money. So they would devalue their currency. This is the problem with the euro. Greece could not devalue their currency. Okay, good. So you guys know that I want to be a bull. Does that mean I've made a definitive decision? I mean, it's factual, right? I don't wake up in the morning and debate what I'm going to do. I'm not a, how does it go? I'm not a master debater, but I'm a cunning linguist. So I know what I want to do every day. And then I use technical analysis to find the right prices in the right time. Buy, ground, done. Okay. So I want to get you there, guys. I want you to have a business or a career based on understanding and common sense. Not little tricks, not little cool strategies of the moment, not smoke and mirrors. Oh, I saw this bat, or I saw this, inverted three pregnant nun pattern, and therefore, I don't even like Elliott Wave. I think it works, by the way, but I don't even like the idea of even counting waves. Just sounds horrible to me, but that's just my personality, right? But the thing is, I want you to have an understanding of how the market works. And it is based on common sense. And once you've made a decision on common sense, we use technical analysis, very simple indicators, to simply identify support, because if you're a bull, you buy at support. Okay? Or if you're a bear, you sell at resistance. So that's all we're using technical analysis for. Are the market conditions correct? So I'm a bull here, right? So let's clear this up. Let's get rid of the pivots. Let's just do this. Okay. So let's go to a daily chart. Okay. Is the market bullish or bearish? Oh, look, it's neutral. Slightly bearish, but neutral. Cool. That's it. So is this a great market for buying? No, not really. Okay. But you can be a bull. The market's neutral. I didn't say you can't be a bull. It's just market's neutral. Am I aggressive? No, I'm not aggressive. But I'm a buyer. Okay? Okay? And it's helpful, isn't it? To just know, like, so what am I doing today? Oh, I'm going to buy a dip. Okay, so you read my book, I'm sure. And it says, if you're a bull, well, first of all, it says this. You were a bull starting here. Cool. So you bought here, right? The other place to buy is the retracement off the 21. Cool. So you know that. So you're making money on this. Cool. Right on. Good job. Okay. And of course, for the bajillionth time, you just got to do it, right? Up, 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 down, down, buy. But then you say to me, Wayne, I don't like moving averages. I don't like them. Cool. So then let's do this. Let's do, where is it? I guess this one. And then let's, okay. Wayne, I don't like moving averages. Okay, cool. Good for you. Let's zoom in. Cool. So how did you know to buy here? Price action. Huh. Cool. See, The difficult part is making a decision. And that's where your job as an analyst is important. Analyzing economic conditions. And of course, we as currency traders pair strong currencies versus weak currencies. So you need to understand what makes a currency strong, what makes a currency weak. We're analyzing oil here. They're related because this has to do with global demand for energy. So you need to know, well, what countries import energy, what countries export energy. Pretty simple, right? Okay. What do you think, guys? Is this the message you need to receive? Am I giving you a rah-rah speech about getting rich quick, about a cool little indicator, a cool new strategy? Or do you honestly believe common sense and an understanding of how global economic systems work together? Is that truly enough? And then some basic technical analysis to either enter your trade or exit your trade? Or should we be scalping 12 pips on CPI and calling that great? What a great day. I made 22 pips scalping or trading the CPI release. Really? Okay. So don't get me wrong. You need to know how to scalp. You need to know how to spot, right? You need to know how to intraday trade. You need to know how to day trade. You need to know how to carry trade. You need to know how to swing trade. That's why we teach it. You need to know all of these things. If you don't know how to enter on a 1 minute chart or a 5 minute chart, why would you be able to enter on a 4-hour chart? So you're going to have to get really, really good at all this stuff. But it's just technical analysis. It's not complicated. Okay? You understand? Like, you're going to succeed at this. But get rid of all the distractions. Turn off all the nonsense. Let's get you some focus, right? CPI is a basket of goods and services used as a measure of inflation. You got that. It's for free. Compliments of the firm. Great. There's more to it than that. But it's not complicated. It's common sense. And you're wicked smart, right? So you got this. So I'm sorry I babbled on for longer than I probably should have today. Apologize for that. So anyways, thank you very much. Weird camera angle. I guess I should be like this, right? So anyways, thank you very much for being on my team. I appreciate the effort that you put into everything. You're going to achieve your wildest dreams. And I know that because your dreams are not wild enough yet. But I don't want you focused on like a false idol, if you know what I mean. Like, I want you focused on, you can achieve this. It's common sense. It's some technical analysis. It's not going to take you 20 years to learn that. But to be a success, you need other things, patience and discipline and work ethic and all that kind of stuff. And if you have that and a reasonable level of intelligence, you'll be very, very successful. But you have to learn how to be a success first. And, maybe that's not taught in school. Maybe it's not taught by mom and dad. But I will teach you how to be a success. And you have it built into you already. That's why you're here. We have a common thread, and we're entrepreneurs. If we were risk averse, we wouldn't be doing this. So it's common sense. It's a bit of skill and technical analysis. So if you got the work ethic and the tenacity and truly the drive, then you're going to go places that you can't even imagine. Can't even imagine it yet. It's going to get really, really good. But let's focus, huh? So thank you, everybody. Make sure you visit tradersway.com and open up a demo account. Also, there's 4,000 videos on YouTube associated with my work. Watch them all. The one that I'm putting here talks about how to trade the Mexican peso and why it works. I'm already in that trade. Walter, that's going to be tomorrow. Okay? Look for the email. Peace on earth. May the pips be with you. May your profits be above average.